Let's get right into this. We had another rough week for mortgage rates. Mortgage rates are up again. Today's PCE data, no good. Driving mortgage rates up again, basically since February. Since February 1st, we're up almost 1% for 30-year fixed mortgages. That's rough, but be patient. Barry says so. I'm going to bring on Barry Habib from MBS Highway for his morning report that we look at, and I think you'll get some details that will help you. And Barry's saying, listen, be patient. Help is on the way.
Everyone, it's Friday, but unfortunately the bond market not in a good mood after a higher than expected read on inflation from the personal consumption expenditures report. We're down 42 basis points right now. It's been kind of all over the map here. 10-year treasury is up as well on yield. So look, we got to get through this. Like the song says, we know that we're going to, in a couple of weeks from today, likely get a better read on the jobs number for us. It'll be more realistic as opposed to the numbers that we've been explaining to you why they were so quirky. In addition to that, we'll get the March 14th read on CPI, and that should be friendlier. There's a lot of reason to believe that those numbers should start to begin to be friendlier. Today's PCE number, man, it was up 0.6% on both the headline and the core rate. It did bump both of those up 0.1% worse on the year-over-year number. Headline was 1/10 worse, going to 5.4%, and also the core rate 1/10 worse, going to 4.7% now. So, kind of moving in the wrong direction for this month. Again, we knew that this would be a little bit of a trying month. We suspect that those medical contracts that turn over, which is a bigger portion of PCE, Lacey Hunt told us to be on guard for that. It appears that he may have been absolutely correct again. So this is just a tough time to get through. Relief should be starting on the way. We got to get through these next couple of weeks, and the news should be better for us. So let's keep our fingers crossed. Let's hope there's not too much damage, and that smart players in the bond market also see that and also take advantage of these higher yields. So there are some bright spots out there, and while we didn't get the good numbers for the inflation today, too good.
So Barry's talking about help is on the way. He's expecting numbers to improve come early in mid-March, and then throughout the summer he's expecting. So we really need to hang on. If we're looking at mortgage rate, we need to hang on. The 10-year treasury yield is up, and things aren't. Listen, if you're in a mortgage rate sensitive business, it's not been a great month. In fact, it's been a terrible month. We actually look like in late January we were rallying and things were doing better and rates were starting to come down, but February's been a rough month. So let's hope, as Barry is saying, let's hope that March is better. If you have any questions or want to schedule a one-on-one appointment of any mortgage-related questions at all, go to www.mortgage-zoom.com and schedule your one-on-one appointment with me, Jerry DeMaio. I can go over 2-1 buy downs. I can go over adjustable rate options. We could talk about what works best for you and your family. So if you go to www.mortgagezoom.com, the appointment's going to look a lot like this. It's a one-on-one appointment with me, Jerry DeMaio. Thank you again for joining. We'll see you again next week, and let's hope and pray for better news on mortgage rates. Have a great day, everybody.